Hi, everybody. Welcome back to our webinar series. My name is Mynor Ramos, and as you already know, Mike D'Amico is with me as we roll out this idea of advanced insurance services. We're excited today because Mike D'Amico's got a guest with him where he's going to introduce him, and we'll get right to the material. But I want to start with one thought to kind of set the tone. Because what I found is that people join and watch and watch a video, watch a webinar with a lot of thoughts in their mind of what's happened in the past. And so my idea is to set this up so that you are successful in listening and learning what Mark has for us today. And so here's the idea. I was doing some math problems with my 11-year-old, and it brought me back to my school. When I was learning how to do math, the teachers were teaching me how to do all the work and show all the work. And so even though I knew the solution in my head, all they wanted was for me to show the work. And so they wanted me to adhere to whatever they were teaching. What happened in the corporate world? They don't want to know the whole work. They just want to know the answer, right? Like type A personalities, right? So
Sure.
similar thing, I was able to adjust to different ways of learning. And I was taught you can't use your hands to count your fingers. Well, my daughter learns better that way. What's wrong with it? And it just opened up this idea that maybe in the insurance world and the financial industry world, maybe that there are other ways to do some things that we have not been taught. Does that make sense? So that's why
Yes.
I would love for Mike D'Amico to just go ahead and introduce our special guest today and tell us a little bit, maybe give him a little teaser about what we're going to be talking about today. Mike D'Amico, 51 years of insurance industry and experience. Please take it away.
Well, I'm glad I started when I was 10 years old, because I'd be old now if I didn't. Um, Mynor, thank you. Thank you so much. I appreciate the opportunity to be here today, especially being able to introduce the gentleman I'm about to introduce. I met this guy literally on a cold call. I walked into his office one day and I basically said, "Hey, I want to learn about life settlements." And he just sort of looked at me because he was one of the few people in the country that knew about life settlements, or at least it seemed that way. And ever since then, Marky has been a fantastic mentor and has been a friend, even though I've never got to be with him in person for the second time, which we'll make sure that happens this year. So I want to introduce Mark. Mark is one of the top brokers in the life settlement industry. And if that name doesn't ring any bells for you, you're in the majority. And that's why we're here today. So without wasting any time, Mark, tell us a little bit about your background and a little bit about life settlements.
Sure. Mike, Mynor, thanks for having me today. Mynor, you touched on something. I'll get into that here in a second regarding education. Life insurance agents are taught to sell life insurance, service life insurance. But when they get to my industry, boy, they're not taught that there's this other option that exists, which is a life settlement. Which brings us to me and my firm. I've been in the life settlement industry for 21 years. My partners, they've been in it. I think they're going on their 27th year. They really got into this industry when it was known as the viatical settlement days, which back then, which was the late 90s, it was a different clientele. We were dealing with clientele that were affected with AIDS, HIV, and along in the early 2000s, medications came out, protease inhibitors came out that said, hold on, we can take the life expectancy of this particular client base that we're buying policies from, which is known as a viatical settlement. Well, guess what? We can now do it on older individuals. And you had some very large banks, CNA, get involved in the life settlement industry, which pure and simple, you're simply selling a policy on a senior, someone that's 65 or older, who's decided, I don't know that I need or want or can afford this life insurance policy anymore. You're now able to sell that policy on that insured who's 65 and older, no matter what type of policy they own. They can come to a group like us, which we're a life settlement broker, and we represent all of the buyers that exist in the industry. And I kind of put it this way to folks, like if you're going to sell your home and you put that for sale sign out there day number one and you close your door, 2 weeks later, you open your door and there's 15 potential people on your front lawn that want to buy your house. What are you going to do? We're going to invite them all in. You're going to take all of their bids. And that's what we do as a life settlement broker. We put all the buyers in the same room. We let the bidding process take place with those institutional buyers to find out who wants to pay us the most for this client's policy that Mike has brought us or whatever advisor representing that client. So that's us. That's our forte. We are a life settlement broker, been doing it for 21 years myself, and it's all we do.
I'd like to jump in real quick, Mark. We just
Sure.
had a case that we were working on that is a perfect example of what you're able to do and who you are.
Sure.
So we brought a guy in, and he had some medical information that he thought would qualify for a life settlement. And we'll talk more about qualifications in a minute. And Mark went to 8 different companies to get an offer, and all 8 shut us down because they said this guy is too healthy. And the arbitrage is what life settlement's all about, which again, Mark will talk more about. Yeah. Mark didn't stop. I went back to the client, got some more medical information, went back to Mark, and Mark went and got number 9. And to his shock and surprise, as well as mine, they made an offer. And we were able to close that case. As a matter of fact, my understanding, the check is going out probably the next day or so. Yep. So Mark is the type of guy, he's not a home office administrator. And for agents, that means something. You know, he's a salesman. He understands exactly what you and I are going through every single day. And from his position, he's able to maximize his connections for our benefit and therefore the benefit of our clients. I just wanted to throw that in, Mark, because that differentiates you from just some TV advertisement that says, you know, send us the information and we'll do it. You know, that's one company. You have the whole industry to go to.
Yeah.
The other thing you know, it really just catches my attention that it's really an inversion of thought and practicality, because you mentioned, Mike, that there was some aspects of maybe this, this not qualifying, but it almost sounds like any newer or some, an insurance agent who's been doing this for quite some time is already used to maybe going to the underwriting guideline, trying to fit that individual into what the insurance company likes. And then this is almost like turning everything over on its head and doing it the other way, right? Is that kind of how we're looking at this there, Mark?
Yeah, it's like reverse underwriting almost, in the life insurance world. And Mike, you brought up a good point there. Like if you're shopping life insurance, to go to multiple carriers, maybe you have 9 carriers, maybe you have 29, I don't know, but you can go to as many carriers as you want. And in Mike's example there, he was right. We went to, I think it was more than 8, but we go to all the institutional buyers out there and they all declined us. Similar, if you're writing new insurance, you may go to all the life insurance carriers that you're familiar with, contracted with, and all their underwriters say, no, this client is uninsurable or heavily rated. Yet you find one carrier that says, no, we see underwriting a little bit differently. We can issue this client as standard or preferred or maybe a table rating. Same thing exists in my industry. I have to make sure I go to every single buyer out there. And what those buyers do, I mentioned reverse underwriting. Your client doesn't have to go to the doctor to take a physical or a paramed exam for a life settlement appraisal. We're simply collecting their past medical records from the last 3 to 5 years. And that's sent to all of the potential buyers, and they're called providers. And each of those providers has their own doctor that will underwrite that particular client based on those medical records. And then in my industry, you also go out and get multiple different life expectancy quotes. And there's about 5 or 6 standard life expectancy companies that each buyer can use. But those will all differ. I can tell you every case that I go get life expectancies on, they don't all come back the same. They all come back different because it's a subjective view, I guess, with regards to underwriting. So a broker's responsibility, much like a life insurance agent, is to make sure you're putting your case out in front of all the underwriters, because every underwriter is going to have a different opinion on that client. And the underwriter in our case that sees life expectancy, mortality. And I know that's a touchy subject for an advisor to sit down and talk to his client about. But I have to tell you, if you're doing a life settlement appraisal, you're giving your client the most comprehensive view of why it makes sense to sell his or her policy, or perhaps not. There's been times we've come back with mortality studies that say, hey, this client only has 5, 6, 7, 8, 10 years to live. And that's something I share with my advisors. So now they can go back to their client and say, well, here's your life settlement offer. Here's your present cash surrender value. And by the way, we did mortality studies and they say you have X numbers to live. Here's what that might cost you in premium. So to answer your question, yeah, we do. It's a little bit different underwriting than what a life insurance is, but our responsibilities is to make sure that the buyers all get a fair chance, let their underwriting take place, and then let the bidding scenario take place. I hope that answered your question there or your point.
Yeah, it was spot on, Mark. Okay, so I'm a new agent. I've only been in the business a couple years, and I hear this thing about a life settlement. So if you would just touch on what a life settlement actually is and what do I look for? Where do I start?
Sure. Easy answer. So first question, what's a life settlement? Well, a life settlement, you're simply transferring the ownership of your existing policy, whether it's individually owned, whether it's trust owned, whether it's corporate owned as in a key man policy, whatever it is, you're simply transferring that ownership to an institutional buyer, to a buyer that says, I will give you X to purchase your policy. And X is always going to be above your present cash surrender value. So that's a life settlement right there. You're simply selling your policy to an institutional buyer that says, in exchange for that buyer taking your policy over, making all future premiums, they're going to get your death benefit. But in exchange, they're giving you an offer that's above and beyond the present cash surrender value of your policy. Or in the case of a term, they're giving you some money.
Sure. I just took a state exam. Okay. And on that state exam, it asked me, did I understand that when I set up a beneficiary for an insurance policy, I have to show an insurable interest? How come you can sell a life insurance policy and literally give away the beneficiary?
Good point. Insurable interest is only at the time of issue. Period. End of story. Only at the time of issue do that you have to present insurable interest on that policy that you're taking out for the insured and designating a beneficiary. When it comes to a life settlement transaction, the Honorable Wendell Holmes in 1911 or 12 said that life insurance is an asset, and therefore that asset can be treated as personal property. That personal property you can change the ownership of, which again, in a life settlement transaction, that's all you're doing. You're going to the carrier, you're saying, hi, I'm Bobby Jones, or the trust of Bobby Jones, or whatever it is, and I'm going to change the ownership of my policy and the beneficiaries to XYZ institution over here that's buying my policy in exchange for cash, which the carrier doesn't know.
Now, wait a minute. Now, I'm a little confused. You said that a life settlement is going to end up paying my client more than cash value.
Correct.
I see this thing on TV where these guys are yelling that you're sitting on a gold mine because you can even do this with term. Now, that can't be true.
100% true. One of my favorite cases, and I send this out all the time, we did it was a $10 million case on a 74-year-old. Now, you don't have to have a $10 million policy to do a life settlement. You can have a $100,000 policy, term policy, as long as that policy is still convertible. What does that mean? Well, you buy term insurance for a specific period of time, 5, 10, 15, 20 years. Well, when you get to the end of that period, let's call it 20-year term, you have the conversion right. What's that? Well, you go from paying really cheap term premiums. Let's say on $1 million policy, you're paying $3,000 a year for term insurance for 20 years. Well, you get to the end of the 20 years and the carrier says, okay, well, your term limit is up. You can convert this policy to a permanent policy. That's usually going to be a universal life policy. And usually those premiums are going to be not usually, always. Those premiums are going to be significantly higher to convert, usually 30 to 40 grand on a from term to UL. Or, Mr. Client, you can pay your annual renewable term premiums for the next 5, 10 years, which, as we all know, the ART premiums go from 3,000 to 4, 4 to 8, 8 to 16, 16 to 32. They get out of control after about year 4 or 5. So in the case of a life settlement on a term, if the policy is still within its conversion period, there are several buyers that want to look at that policy. Now, the ideal client's going to be someone that's had some change in health, because usually that client's going to be in their late 60s, early 70s. If they've had some change in health since the policy was issued 5, 10, 15, 20 years ago, they do not have to be on their deathbed. I think that's the biggest misnomer about my industry, that, oh, I don't have clients that are on their deathbed and need to sell their policy. Well, good. We look at clients that have life expectancies from 2 years to 22 years. So if you're a 71-year-old, you've had some change in health, you have this term policy, that say, no, I'm not going to convert it. I don't want to pay those premiums that are significantly higher, which 85% of the time, this is a very real number. The Government Accountability Office, I think, put out that 85% of all term policies end up in lapse or surrender, and 88% of universal life policies. So back to that term, we had a case. Client was a high net worth senior. He was 73, had some change in health, $10 million policy. Premiums to convert were 480 grand. Client said, no, I'm not doing that. I have other insurance in place. I don't need this $10 million term policy. He was literally getting ready to surrender it. Advisor came to me and I said, no, John, I think we have something to work with here. Long story short, we went out to all of our buyers. We got the client 550 grand.
Wow.
550 grand for an asset he was walking away from for zero. The term had done what it needed to do. And all of a sudden, his advisor said, well, hold on, let's look at a life settlement. I don't know if you're a fit. Well, he was a great fit. And I could tell you, take this a little bit further. The client got 550 grand. The agent will be made the agent of record. He or she gets to take part in the term conversion commission, because my buyer's immediately going to take that policy over. They're going to convert it to the UL policy, which in this case, the premiums were 480 grand. The agent took part in that term conversion commission. He actually got half in that instance. And the client walked away with 550 grand. And now that particular advisor was the first one in front of that client who knew the client just got a check for 550 grand. He got to sit down with that client and say, where should we put your money? And I believe they put it into an annuity. So you look at that scenario, there were 3 commissions, I believe, paid out to one advisor on a client who was walking away with an asset that had gone through its use. You know, he had a term policy, he used it for what was needed. And all of a sudden someone says, well, hey, look at a life settlement appraisal. You got $500,000. Those are great examples.
When I talk to agents, and of course, as you well know, because it's the same in life settlement, is the toughest part of our business is getting in front of someone, getting a prospect. And I point out to them, I say, you know, you don't want to spend a lot of time on the life settlement industry when you first start. You want to give it to someone like me and Mark and let us do our thing. However, stop and think for a moment. You just mentioned a fantastic case. Guy was going to walk away from $10 million policy. He ended up with $550,000 in his hand. Agent was doing real well. But what position is that agent in now with that entire family?
First position.
It is the best, you know, way to find clients that I've ever seen, because now you have a generational thing where this guy's telling his family, hey, you got to deal with John because John saved me from throwing $500,000 away.
Yeah. In this instance, the agent that brought us this case, he was not the agent that wrote the policy. And I have to point that out to individuals. You do not need to be an insurance expert. You do not need to be the one who wrote the policy on the client. All you have to be is the one who asks one simple question. And here's the question. Is your life insurance still meeting your needs? Or have you come to a point in your life where that need for insurance that you took out 10, 20 years ago no longer exists? Well, guess what, Mr. Klein? If you're like the 500,000 consumers that let their policy lapse or surrender every year, and that's a very real number, about 500,000 seniors let their policies lapse or surrender every year. My industry buys about 3,000 to 4,000 of those policies. So you see there's a big disconnect right there. If you're that advisor that poses that question, that puts the information in front of that client, again, it doesn't have to be your longtime client. It could be the client you've met for the first time, that you're the one that says, hey, if you own life insurance and you feel you no longer want, need, or can afford it, you should look into a life settlement appraisal. It's free. Doesn't cost you anything to have it appraised, much like, say, your house. When you have it appraised, there's a fee. Not in my industry. We do not get paid until we make a client happy and they say, wow, I really like that offer. That's how we do get paid. But again, you don't have to be that advisor that sold your client insurance. It can be a first-time client. It can be a long-time client. You just have to be the one that says, hey, are you aware of this option? And it's called a life settlement. And in general, and that's a very real number, every single settlement that we see through our office here, in general, we get anywhere from 3 to 7 times the client's cash surrender value. Now, does it happen on every case? No. Some cases I'm barely able to beat cash surrender value, but in those instances, if a client's going to surrender a policy for 50 grand and I give him 70, he'll probably want the 70 opposed to the 50. So hopefully that addresses your question, Mike.
It sounds like something that I always talk to agents about is fact finding. So when you sit down with a client, whether he's a longtime client or a brand new, you got to ask the questions. And one of the questions should be, do you have a life policy that's not performing the way you need it to perform, or have the needs for the insurance, and life settlement may be something we should look at.
Yeah, this is just another tool in your toolbox.
Yeah, exactly. Agents need to have that in their fact finding. Mm-hmm. So what am I looking for? I'm meeting people every single day. What do I look for as a possible prospect?
Sure. As far as the consumer, the person who wants to sell his or her policy, our industry is simple. Usually we're looking for insureds that are 65 or older. Now, I've seen that age come down to, say, 60, but in general, we're looking for individuals that are 65 and older that have had some health change. Again, you don't have to be terminal. You don't have to be on your deathbed. Just some health change since that policy was originally issued. Now, unless you're in your mid-80s, you can be perfectly healthy. That's fine too. But again, 65 or older, we're looking for policies at a minimum death benefit of $100,000. All the buyers that we represent, which there's dozens in my industry, they're all looking for a minimum death benefit of $100,000. And really the two types of policies that make up 80% of the sales in the life settlement industry are going to be universal life, guaranteed universal life, i.e. VUL type policies, and then convertible term. Mm-hmm. Now, my industry also buys whole life. Those are tougher because whole life policies are good policies. If you funded them correctly, you should have a very high cash surrender value. And that's the number a life settlement buyer has to beat, is your cash surrender value. But by and large, if you're talking to clients, look for 65 and older that own life insurance of virtually any type, but usually it's going to be UL product and or a convertible term, some change in health. And then you just look for that client whose original need has just changed. We all buy life insurance for a reason, whether we're 25 or 55 or 65, but those reasons change. The very reason that people buy life insurance exists for why they sell it in a life settlement transaction, whether they got divorced, whether they're bankrupt, whether their estate is not as big as what they once had, they sold a business, or their life insurance has just done what it set out to do, meaning protect the family while the kids grow up. Whatever it is, the same reasons exist for why people buy insurance, for why they sell. So that answer your question, Mike?
It always does.
Okay.
Yeah. I would probably just ask one question that I would for the agents.
Sure.
I mean, there's probably a lot of agents who run, their agencies the traditional way, brick and mortar. But then there's also other agents that are in the home. Maybe they're selling final expense policies, mortgage protection, health insurance, PNC offices, really anyone, captive, non-captive, mid-captive, doesn't really matter, can really have an impact, with their clients presenting just an appraisal of this policy that maybe will lapse. Is that correct?
Yeah, it is. And I mentioned this, you do not have to be an insurance expert in life insurance. You just have to be the one that's presented this idea. And from there, we can walk you through the process. And again, as I pointed out earlier, this is the most comprehensive view that any client will ever have of their life insurance. And I stated the reasons why. We're able to now sit down that client. We do a mortality study. We present them with a life settlement offer. We show them their cash surrender value. Hopefully that number, we've beaten it by 3 or 4 or 5 times. You can now project future premiums based on their mortality. Again, I know that's a touchy subject, but this is something it's very important. And at the end of the day, this is an asset. It's just like your stocks, your bonds, your homes. This is an asset that has real value in today's market, which is the secondary market for life insurance. So whether you're a PNC person, a CPA, an estate planner, an insurance expert, it really doesn't matter. You just have to be the person that's told your client about the life settlement option. And then it all starts with a phone call into Mike. He's going to ask some questions about, well, how old are you? What's your health? Let me look at the policy. And from that phone call, that's really how everything starts in a life settlement valuation. It's a simple phone call. And that phone call, we usually can tell that client, hey, you're a really good prospect for a potential life settlement offer. We can even give him or her a general sense of where we feel an offer might come in at. And then the client can sit and say, okay, yeah, let's go forward. Let's fill out the application. Let's let the life settlement broker, Mark's firm, do all the work, which we do. And then in 6 weeks, we come back to that client and say, hey, here's the good news. Here's your offer. And then sometimes we don't have an offer, which we tell the client, hey, good news. You've got a very good policy, or you're going to live a very long time, 22, 5, 30 years, whatever it is. So we don't have buyers. So again, it's a very comprehensive view that can be done by anyone.
And my understanding also, Mark, is once the subject has been broached and you're having a conversation with your client, let's say something comes back and somebody does have a very long LE, life expectancy, and we can't make an offer. That doesn't mean we couldn't make an offer next year.
No, not at all. I see plenty of times where we've done a life settlement appraisal. It may be outstanding, and the client just says, I'm going to hold on to it. That's fine. This is a free, non-binding appraisal of your asset, your life insurance, that at that time when the appraisal is complete, you can either take the offer and move forward, or you can say, you know what, I'm going to hold on to this. I'm going to tuck this away in my file and I'll revisit this. I've had people come and revisit it in 6 months. I've had people come back to me in a year, 2 years, 6 years. It doesn't matter. You can look at an appraisal on my industry at any time, and you can do it multiple times.
And this has become a science of a level that most people wouldn't even be aware of. I remember a conversation I had with a gentleman up in Maryland who's one of the top people in actually, creating life expectancies. And he was averaging over 98 percentile accuracy. And, I thought that was phenomenal. So this isn't just a few people making a guess. This is a very, very disciplined science. And they take their time and they actually do make an evaluation, as you said, that is probably one of the best evaluations they ever had in their life on their insurance and on their program.
Yeah, 100%. I've said it once or twice here that, this is the most comprehensive view that you can bring to a client to show him or her why they should sell their policy or perhaps not. And that's completely up to them. Our role as a settlement broker is simply to make sure that the buyers get a fair chance to appraise a policy and come back with the highest offer, which that's my role, is to put all the buyers in the same room and let them, fight it out in our view. And the highest offer always comes to the surface. And that's what we report to our advisor.
Wow.
So,
amazing. Awesome.
Go ahead,
Awesome.
Mynor.
This is, for 50,000 foot, view of life settlements with experts in front of us. And really it's just a simple question. Is the life insurance that you currently have still serving the same purpose that it intended it for? Has there been any health changes for you? Mark, you mentioned that there's 500,000 of these that are being lapsed or surrendered. Think about this. There's 10 to 15,000 people turning 65 every year out of the 80 million something baby boomers. So you think maybe that number will change? Because probably what they do as they retire, they refigure or they restructure their finances. They start looking at this and start saying, maybe this is something we really don't need. But if we have the conversation, maybe we can think about the way the business goes, right? How GDP will be affected by this in the movement of these instruments. These are assets that are being left on the table that people are just not having a conversation about. So really, for all of our listeners today on this webinar series, is you just got some education that maybe you haven't heard out there right now. And hopefully this will bring up some more things in your mind that you can start asking more questions to somebody like Mike or Advanced Insurance Services. I would love to help you out and walk you through the process. Look, make it real simple. Just start having a conversation, get in touch with Mike, and go through the process. Don't try to be the hero. Don't try to be the know-it-all. Don't try to go. I love it when they start talking about, I'm going to go learn everything about this. Okay, see you in about 10 years. And then we have like written the market. I'm just kidding. But thank you guys. Hey, listen, Mike, Mark, any final words? And this has been very enlightening to all of us.
Well, I'm gonna jump in real quick here, and I'll give Mark the final word, and that's simply this: especially for newer agents. This is not something you want to pursue on a daily basis. You want to make this part of your toolbox. You want to make this part of your fact finding. And as Mynor has said, and as Mark has pointed out, that if you find somebody that you think might be qualified to, get an appraisal, call us. We'll take the time. We'll work directly with Mark. He'll work with his providers, and then we'll get you an offer. And everybody gets happy that way. If you try to pursue this, you're going to be out of the business because you're just not going to get enough traction at the beginning to make a living. Mark, you got the final word.
Well, I appreciate both of you bringing me on today. I tell folks I don't really have anything to sell you on using my firm through Mike, whatever it may be. We're here to educate folks. And the fact of the matter is that, there are too many seniors out there that don't know about this option. I mentioned it. There's about 500,000 policies that lapse every year. We buy about 3,000 to 4,000 as an industry. You appraise your stocks, your bonds, your real estate. Why aren't you appraising your life insurance on a yearly basis through whatever review that you do with your client? And again, if you're not their client, that client's insurance expert, that's okay. You can still mention the life settlement option to them, and we can still walk them through that option. And many times that settlement appraisal is going to come back at a number that's 3 to 4 to 5 to 7 times what the life insurance carrier's cash surrender value is. And you want to look good. You want to look like a hero in front of your client. Help them out with a life settlement valuation. Now, one thing I'll tell you that you see advertisements on television, Mike pointed out one, there are some very good companies that we represent. Those are the buyers that are advertising to your clients out there. So your clients, or even not your clients, they're going to get the life settlement experience through another party unless you offer it to them. Simple as that. So guys, thanks. I do appreciate the opportunity as always, Mike.
Mark, you're still the best. Thank you.
All righty.
Well, thank you to all the listeners. This has been another webinar series for Advanced Insurance Services. This is Mynor Ramos with Mike D'Amico and Mark Murky signing off. Till next time. Thanks, guys.